Now, the tech giant getting hit today with a rare downgrade. Barclays slashing its rating on the company to underweight, cutting its price target by about $1, now citing weaker demand for the very new iPhone 15. The analyst behind that call, Tim Long, writing, quote, "Our checks remain negative on volumes and mix for iPhone 15, and we see no features or upgrades that are likely to make the iPhone 16 more compelling." And Maddie, I actually just talked to Tim Long a few weeks ago, and I asked him about Apple, and he has long had a bearish view on Apple and a lot of the demand that we are seeing from the iPhone, the fact that the demand just is not met expectations, being a huge headwind here for the tech giant. He doesn't think the iPhone 16 is going to be any different too, just in terms of some of that reception and lack of excitement that we're seeing right now with the iPhone 15.
Well, it's great that we have that insight from him, because I'm so curious about this, particularly given that it's just a $1 change. But if you look at the market, it seems like a much bigger reaction than that. Having said that, this has been the story for Apple over the past 12 months. None of this is necessarily that new. We've been talking about waning demand, profits, revenues going down. And so the question for a while has been, is the market going to start to have some questions about the valuations, about the multiple expansions for a name like Apple? Is this going to be the year that those valuations start to matter?
Yeah, exactly. I mean, take a look at Apple, obviously. Shares up just about 50% in 2023 alone. You mentioned valuation. So many of these headwinds that are facing not only Apple, but so many of these consumer-facing stocks. When we take that all into account, the fact that that stock is still up about 50% and has disregarded or really brushed aside any of those concerns is really one of the reasons that Tim Long is saying, hey, maybe it's time that we do see a bit more downward pressure on shares moving forward, at least in the short term, when we're starting 2024 off with some concern already.